Gold has been making the headlines recently with gains that have taken the price of the precious metal to more than 6-year highs. But what's not hitting the headlines quite so much is the sudden burst into life of silver. Saida Latosh joins us now from GFMS Refinitiv with some more analysis of this. It's been an extraordinary run-up for precious metals generally. What's been behind the move? What should we take away as the message in terms of what's going on in the sector?
It has been indeed an impressive rally we have seen so far this year. Well, it's always a combination of factors, but what's more importantly this year, it's the overall macroeconomic environment that has been playing out favorably for gold, with other precious metals benefiting from the impressive rally in the gold price we have seen, and to a certain level following the gold's lead. So to be more specific, we have seen a surge in global economic and political uncertainties, with data pointing to a slowdown in economic momentum, growing risks from the US-China trade negotiations, and a threat of a hard Brexit. So what's been particularly influential this year is a gradual shift in the mood among the world's key central banks towards a more accommodative monetary policy. We have seen the European Central Bank extending its pledge to keep its interest rates at record lows for a prolonged period of time, at least until mid of next year, and signaling its readiness to introduce a fresh stimulus and interest rate cuts if weak economy and weak inflation persist. Likewise, the US Federal Reserve indicated its openness to a more supportive monetary policy. And we have seen the Fed cutting interest rates in July for the first time in 10 years.
So you're saying really that we've got a situation here where people are liking the idea of precious metals as a safe haven. So it's a traditional sort of market move, is it?
Yeah, exactly. Definitely.
Yeah. Let me just quickly bring up a chart of gold and silver because we can get a little bit more of an idea of what's happened. As I said at the top, we've got gold here at some 6-year highs. We're currently trading at 1537. But I think if you can just keep that in mind and we switch to the silver chart, I want to go to this, as I said, this sudden burst of activity. These are daily candles, taking us up to now more than 2-year highs. But bearing in mind, gold has had this initial run. I want to talk a little bit about the gap between the two prices, if I can, because if we'd been talking about a month or 6 weeks ago, we'd have been looking at a gap of around about 93 times. Here we are now at 83 times. So what that means is, of course, the gap between gold and silver is getting less and less. In other words, the number of times that silver goes into the price of gold. First of all, why is the gap so important between these two as a measure of what's going on, which we hear it is?
So indeed, we have seen silver doing quite a bit of catching up with gold over the past few weeks. And just like you said, if we are looking at a gold-silver ratio of close to 95 at the beginning of July, it has come down by quite a bit since then, and we're now looking at a ratio of close to 85. So silver had been heavily oversold, and its poor performance relative to gold since the beginning of the year has been predominantly sentiment-driven. So basically, gold has been viewed as a hedge against risk, while silver is predominantly considered as an industrial metal. We have been saying for quite some time that silver will start catching up with gold and will gradually outperform its yellow metal. And this is exactly what's happening now. It is not uncommon for silver to outperform gold during the uptrend, and likewise to underperform in a bear market. Since silver is so much more volatile than gold, and given the size of the silver market in value terms, it only requires a small amount of money to have a greater impact on its price, far less than gold. It is possible that silver, the gap between the two metals, will continue converging in the coming months, especially if gold maintains its rally. But at the same time, I think it is unlikely for the gap to get back to the average level of around 65. This is what we have seen over the past decade.
And of course, that gap can close any one of a number of ways. Gold could fall, silver could rise. There's all sorts of different scenarios. Are you suggesting, if we take a look at each individual metal, that there is going to be a convergence because gold is going to lose steam and start to drop? Or do you see gold continuing its rise that we've seen, but by a lesser degree.
Yeah, exactly. So I think we kind of expect that all this uncertainty and instability will continue driving the gold price higher. Obviously, it's not going to be a straight line. We're likely to see a pullback if we see, for example, the professional investor community starting to feel that the gold price rally is running out of steam. Then we're likely to see a pullback. And also all the technical indicators and gold positioning in the futures market, it is indicating that gold has been clearly overbought. So there is a clear risk of a pullback. So in that case, obviously, given that silver usually outperforms or underperforms depending on the scenario, in that case of a pullback, we're likely to see that silver will fall back by even more than gold during the downtrend.
Okay, so what could spark that? I should say at this point, I know you can't give definitive levels, and I'm not going to ask you about specific price levels you're targeting, but just a general sort of sentiment. What, though, could be the catalyst that might give an opportunity for those that have bought so much to now begin to sell? What are you looking out for to give you an indication that sentiment could change?
So it could be basically quite a few things. So I guess the main one, the main threat would be coming from, again, the message from the central banks. If the Federal Reserve suddenly, comes to markets and say, no, it's actually, we think that the economy is not doing that bad, and we'd rather, wait and see what's going to happen. So we're not going to actually, start a new easing cycle, and it was just a one-off interest rate cut, like a mid-cycle adjustment. So in that case, obviously markets can become more cautious, and investors will just jump into opportunity to take profits.
So basically buying back into risk rather than the safe haven play. But I mean, I guess you're talking there about something that's unlikely to happen in the immediate term because of the fact that yields are falling and this inversion and so forth threatens this idea of a recession at some point. Let's take a look, if we can, at what's happening in precious metals with regard to the cryptocurrency space, because a couple of years ago, people weren't even seriously thinking about cryptocurrencies as a threat to any part of the market. But now all of a sudden, you've got this rise in the crypto space. To what degree do you think that cryptos are taking away some of the, forgive the pun, luster of the precious metals markets? Is there a play from one to the other? Is there a correlation, do you think? I mean, we've seen in the last couple of days, here we are now sitting on Thursday, 29th of August. Last couple of days, we've seen a little bit of money come off the table for some of these cryptos, but money continues to go into precious metals. So I think possibly I've answered some of the question myself, but to what degree do you think there is some sort of correlation between cryptos and precious metals?
Well, I think it is important to remember that gold and cryptocurrencies, there are big fundamental differences between the two. So the gold market is much more liquid and it's much less volatile. It's also a well-established and regulated market compared to cryptocurrencies. Also, gold is a well-known and a popular investment asset and is widely regarded as a hedge against risk. And this is quite the opposite to cryptocurrencies, which are basically predominantly regarded as risky assets due to their extreme volatility. I guess another important differentiating factor between the two is wide uses and applications of gold. So for example, the highest demand for gold is coming from the jewelry sector, which accounts for roughly 50–60% of total gold demand. About 30% comes from the investment portfolio, and the rest is uses basically in industrial applications, and also what's important is central bank purchases. So in fact, central bank purchases have been an important source of gold demand, and its significance has been strengthening over the past decade. So we have seen continuous buying from at a strong level from central banks in emerging markets, in particular Russia and China.
Do you see that continuing?
Yes, we do. So on the one hand, this is partly an overall diversification strategy away from the dollar, but also at the same time it sends a clear signal to the markets that emerging market central banks are concerned about global economic and political uncertainties, and they're quite keen to continue expanding their gold reserves. And this is actually something that you can't really relate to when it comes to cryptocurrencies.
Okay, let's bring it all together and ask once again. I'm going to bring up these two charts again because I want to get your thoughts on where we're going. This is spot gold. Just to remind ourselves, we got to this level at 1536, but silver has had this, as I said, this almost exponential rally. Just quickly recap again, as I said, without using particular numbers, where you think the momentum's going to be. Is silver going to continue with this, where gold's going to be an underperformer? But broadly speaking, where do you see things developing over the next couple of 3 weeks or so, 4 weeks?
So I feel that silver will, continue outperforming gold in the coming weeks, as long as we see gold price rally continuing as well. But like I mentioned before, as soon as we feel like investors are a bit more cautious about the momentum of the gold rally, we're likely to see some profit taking on the gold side, and it's likely to hit silver price as well. Also, it is important to remember that silver, while it is also an investment asset, but it is predominantly seen as an industrial metal. So when it hits the markets that the global economy is indeed slowing down, this is going to be a major drag for silver as well.
Okay. We'll leave it there, but thanks indeed for joining us, Saida. It's been a pleasure having you on board to take a look at what's happening in the gold market side. Latosh joining us there from GFMS Refinitiv.